All in all, not too bad week for Nasdaq last week. Nasdaq down only 0.18%. The week started very badly but ended somewhat good, I would say. All in all, as expected. Dow Jones fell by 0.6%, ending the week at 39,497. And if we look at the chart, we can clearly see that Nasdaq is facing a lot of resistance at current levels. Will it break it? Will it make it? Will it be a green week? That's one of the questions I will try to answer in this week's podcast as we're heading for week 33 and you are listening to the StockInvest.us podcast trading tips with Jim. Last week I told you I thought it would be a volatile week where they might end up. But as I just said, it was not too bad at all, I would say, given how the last few weeks have been. A new week is here, and my biggest concern is Nasdaq facing a lot of resistance at current level. It will not take much for Nasdaq to break further down, and then we can head for yet another fall. And this is very, very classic. When we had the huge fall like we had 2 weeks ago, you get a period of grace and then you get into new huge falls. And usually these comes in 3, meaning that we will see 3 major falls in the market before we can start to think about the bottom. Nobody really knows. It may be that the bottom is here, that this is the best buying opportunity of the remainder of the year. Nobody really knows. I'm just telling you how it usually goes. My bet, because I have to give you a bet about what I think will happen in the week ahead of us. And if I remember correctly, I said 2-3 weeks ago that we are in for volatile markets, a lot of up or down. We will see the 3% down days. But in a few weeks, we should start to see volatility decrease. In general, I think we might be there, meaning that it will not be as much daily volatility as has been. I think that will slow a little bit down. Last few weeks been a trader's dream. I mean, if you're able to do your trading good, doing the low points, getting out at the high points, it was such good money to be made all week, because I saw several days it started either green, either red, and ending opposite. And if you are able to trade on this, of course, there is money to be made. This opportunity will still be present, but in general, I think the daily volatility will slow down a bit. It will be fueled during the week. We will have some very interesting inflation numbers. We'll get back to that very, very shortly. But in general, I think that we will start to see more a trend direction. And just to give a little context, for months and months, Nasdaq was moving up with very little volatility within a very, very nice rising trend. And as I said, this trend has been clearly broken. There is no doubt about that. It's been significantly broken. And we have a trend shift. It will take a miracle for Nasdaq to get back to what it was for just a few months, or let's say more or less most part of the year. It was within a very, very somewhat okay trend. This is over. We are in new territory. Normally, based on technical analysis, what we see is a trend break, and you will change trend. This can either go from still being rising to less rising trend. It can go horizontal, or it can be a full trend flip, going from a rising to a falling trend. I wouldn't bet on falling trend yet, but I just say that we clearly have a huge change in the markets, and this can last for anything from a few weeks till years. Now, Nasdaq facing a lot of resistance, still coming from a very low point. have some momentum. The first thing it did on Friday was breaking the short-term moving average, which is a good thing. That indicates a small buy signal from the short-term moving average, while there is still a long way up to the long-term moving average, and there is a general sell signals from these two moving averages, also called a death cross. And when checking markets today before making the podcast, I checked for a lot of stocks to see if I could find some stocks and give you a few stock tips during the podcast. I saw one sell signal after the other. It's very, very seldom I have seen this many sell signals in the chart. They were there last week, and I told you about this, I believe even 2-3 weeks ago, that they start popping up. But now they seem to be everywhere. Major sell signals has been issued in several stocks. From a previous period where there were mainly buy signals, we are now, as I said, in a territory with major sell signals. If Nasdaq is able to push just a little bit up, all the resistance which is facing now will become support. So we would really want that. We would like to see Nasdaq push up, get support below, because that can create a better fundament for the next few weeks moving forward. If it does, the next huge resistance will be around 7,600 points, so we can have like 1,000 points upturn before facing then yet another huge resistance that will also be, by the way, the long-term moving average. So there will be resistance from accumulated volume, there will be resistance from moving average, and yes, we just have to wait and see. RSI, one easy indicator for most people to learn and love, doesn't show anything special. It moves at the lower part, but like Nasdaq earlier in the big upturn, it was moving at the higher part. Now it's moving at the lower part. Going straight to the buy and sell signals, we can say that across all the tickers that we analyzed, 21% is giving buy signals. We remember last week it was 19. Nasdaq up from 9 to 11, and I told you 9 was very short. Could be some buying opportunities for Nasdaq, and Nasdaq had a very good end of the week, especially if you were able to stay out first part of the week and buy in on the last part of the week. You probably made some good gains. New York Stock Exchange 31 staying relatively high there, while London at 20 and Frankfurt at 25. All of these are somewhat stable, and it's argue a little bit why I think that there will be a less volatility, less daily swings. It will be much more directional. So either markets decide to go upwards or they decide to go downwards, but with less swings. Going further to Tokyo, only 6% buy signals in Tokyo after being 3% last week, and I would personally say that getting into a few picks in Tokyo might be a good opportunity if you have that chance, because it's way oversold, and that usually give less risk with a potential huge upside. Just in China down at 16. I told you I believe Asia is a place to be. Personally, I have started a slight switch to Asia. This comes with a small taste in the mouth because there is a huge tension between US and China. There is general huge tension between West and East. BRICS, as I've been telling a lot about in this podcast series, is growing stronger, and they say they will move totally away from the dollar. So we are in a period where isolation becomes an issue. We are getting bipolar, two big poles, the West and the East. We had a long period of peace and prosperity. It seems to be over. The West and the East is getting harder and harder fronts every single day. So unless we see some political changes, has to come from policies, that we start to see less tension. We know the Middle East tension is growing. It's just a matter of time before things will escalate. Hopefully not as much. US is pushing their warships down in the region, trying to calm Iran because Iran has promised to take revenge over Israel. At the same time, we know that left ideology is pushing everywhere, and also in US, much more left-oriented politicians are again seeking powers in the US, which means that because they say at one hand, they say that free Palestine, and in the other hand, they say we'll support Israel. But if there is any sign of weakening support for Israel, you can be very, very sure that this will be used aggressively. And right now, with the warships in the Mediterranean, it's hoping to be a deterrent, meaning that Iran will think twice before going too heavy at Israel. Because if that happens, there has to be retaliation, and things can just escalate very, very fast out of course. So it's brewing everywhere. We are still not on a path of peace. Luckily, Ukraine, Russia hasn't escalated. It is stable devastation. And luckily for the world, not so nice for Ukraine, of course, and all the people being unnecessarily killed in a war. That has stalled. Taiwan conflict, which I have mentioned also many times, is at a somewhat standstill, not much, but it doesn't take much before that one also can come up. If China does anything, US have pledged to go in with full force, which we all know will mean full-blown war. So there is tension everywhere in this climate. East is going to the east, west is going to the west. The monetary policies follow. You have BRIC establishing, you have dollar being threatened. And in general, while I say it seems to me to be a good choice to be in Asia. I've successfully done this before, moving between parts of the world with investing. There is a chance of further escalation, and then if you are sitting with money in the east, you can really be burnt. So again, I would only advise it for those who have the risk capital, but for me it seems like an obvious good position in Asia, and especially Japan. And we know Japan is very westly oriented, so less chance than, for instance, if you go into Chinese stocks. So, but that's usually how you do it. You try to play your hand when the fear is at the most. Then you start to stack up your cards. And for me, Tokyo looks like a good possible buying opportunity right now. Did I mention National Stock Exchange of India? Well, it's 36 down from 43, but looking at the chart of National Stock Exchange, the NSA 50, or Nifty 50 as it's called, it still is within a somewhat okay rising trend, struggling with maybe giving a huge sell signal or a huge buy signal. But in general, I would say a little more stable than, for instance, Nasdaq. So if I had to choose between investing in India and investing in United States, I would say that India holds a slightly better hand, but not by much. As I said, in general, the week looks to me to be less volatile, but there are big events during the week, and there are some quarter results, but these are not big enough to really change the market. They will just give a slight insight, but it's already tomorrow on Tuesday. You will have PPI numbers, the production price index numbers, will give an insight in how inflation is moving among producers. And it's expected to increase by 0.2% over the month, that the producers have to pay 0.2% more for their goods, while it will stay 2.3 12 months over 12 months. That will be the very first inflation reading coming out. Tomorrow we will know how producers are doing. On Wednesday will be the consumer price index. So how much did we actually have to pay more or less for the goods over the last months? And for CPI numbers, it's also expected that the goods increased by 0.2% last month in July, and 3% 12 months over 12 months. 3% is still higher than the Fed target, but Fed decision will very much hang on these numbers. We do know that they are changing a lot of items in the CPI portfolio to try affect the reading of the numbers. Very interesting to see. My bet still is that inflation is just doing a boomerang now. It's down a little bit low, but it will come back much harder. I gave you a lot of reasons for these things. A lot of companies are shutting down their businesses. Either it is pizza chains or whatever it is, they're shutting down a lot of businesses. There will be less goods available. We know the inventories are very low. They were stacked full during COVID. Many companies have been using their inventories and taking write-offs on their inventories, selling goods relatively cheap. Now they will soon start to have to restack again. And this will of course put a toll on the prices. We have the conflicts, as I mentioned, so I think there will be a boomerang effect, but everyone is hoping that the inflation numbers will be low. If inflation goes down, it means that the interest rates will go down. If interest rates go down, usually this affects the stock market positive. So that will be the main focus of this week, will be tomorrow, Tuesday and Wednesday, with inflation numbers. For sure, they will set the tone. Now, if consumer price index come in just a little higher than market expect, I think market will react very negatively to this, and maybe push the market down. Thursday we will have job numbers, and as I said, the focus will now be on the job numbers, and job numbers, the unemployment rate is increasing very fast, but and everyone wanted that. So why does the market react so hard to the job numbers? Well, suddenly the job numbers started to move in the right direction, meaning that there is less pressure on the economy, and less pressure on the economy means less inflation. Less inflation means, as I said, good for the stock market, etc. Now, job numbers suddenly started to move very fast, and the worst thing that can happen is if we get tons of unemployment, because that goes straight into economy and recession. And you probably heard the word mentioned a lot lately about the recession. Now, if so, you see media, they just pushes, this is the job of the politicians. They have to push a narrative that now everything is super good. It's how they make their money, by lying, of course. And they will just keep that narrative that everything is under control. You cannot spread panic saying that there is bad numbers here and there. So they will revise these numbers. We see it over and over again. The jobless claims numbers, which will come out Thursday, has been revised and revised. Every time they come out, they are just revised the week after to being worse than they actually was. Unemployment went up from 3.6 to 4.3. It will continue upwards. For Thursday, it's expected that the jobless claims will be 233,000 for the week. We got a small shock just 1 or 2 weeks ago when it was much higher. Now it's expected to be 233. This number if it comes in too low, it will indicate that there is pressure on the economy, so the market will not like it. And if it comes in too high, market will not like it, because it means that there are too many people losing the job. Read the news and you can see how many companies are cutting employees. There is not one single quarter results being published these days without companies saying that they will lay off people, 10%, 15%. These things will cut hard into the economy. You have to remember that when a CEO say that we will do a cost saving program, cut 10% of their employees. They doesn't cut it the same day. It is a transitional phase. And I think that we start to see, because this happened many months ago, Microsoft, Meta, all of these said that we will cut jobs, and these are now slowly coming in to the market, and more will come. Speaking about quarter results, Rumble will be today. Rumble is the competitor of YouTube, and I always like Rumble because YouTube had too high position. Rumble to me looks like a possible buy in the long run. I think no matter what happens, there will be continuous competition in the video segment, and Rumble have taken a little space, and it might take more space. Who knows? Tomorrow will be Home Depot. Home Depot will give a little insight into the consumer behavior. And while speaking about consumer behavior, we see it all across the board that consumers are changing. And if I'm not mistaken, 11% of all credit card owners are delinquent on their payment every month. So 11% of everyone are not able to pay their bills by the end of the month. Mortgages goes the same way. There is so many signals saying that the consumer is struggling. And one way or the other, the consumer needs to get more money to push things back, because when you are delinquent on your credit card, it means that you have to save somewhere, so you start to cut your subscription. Mentioned in previous podcast, I'm not sure I will go into subscription-based services in my investing, because I think many of these will face a tough time moving forward as consumer behavior is changing. Home Depot numbers tomorrow will give a little insight in these things. On Wednesday there will be Cisco and UBS, and on Thursday there will be Applied Materials and Alibaba and JD, to mention some. Friday not much. Friday we'll have consumer sentiment numbers, but as I said, the consumers are changing behavior. They are forced to, and to continue the argument, so they need more money some way. So how can you give consumers more money? Well, either you create more work, you lower taxes, because that will give more available or disponible income, available income for consumer purchases. Or, for instance, you cut the interest rates, give a little slack to people with high mortgages, expecting them to use this money then to buy more pizza or whatever. But there is a slowness. Even when you start to cut interest rates, there is a slowness before the banks follow, and there is a slowness before you really start, if you already are delinquent in many things, that before you start to see some real relief in your economy and your spending get back. So there is a delay, and that is some of the big fears in the market, that Fed's been too slow cutting interest rates. But I think Fed are squeezed. I will not bet on it. Probably they will try to give the market some positive little boost by acknowledging one interest rate cut, but we will see how inflation number goes. Oil up $4 last week to $77, and I just say that if anything happens in the Middle East, just expect oil to go sky high. And when looking at stocks that has done somewhat okay, we see that Frontline, for instance, didn't lose much last week, was not able to gain anything, but oil stocks have held up somewhat good in this turmoil. And I think energy, I said last week that there was a buy signal in the energy sector and the tech sector, but especially energy sector. I think there is a lot of room in energy sector now if you want less risk with potential upside. Gold $2,474, being down $12, was hitting just about 2,500. Now it's back a little bit, but soon we will be over 2,500. I remain very bullish to gold. 10-year Treasury yield, the one number that if it goes up, market goes down, increased by 0.15 or 3.8% last week to 3.94. So suddenly investors starts to think that not sure interest rates will be cut as fast as people believe. I believe I saw it was 66% believe there will be interest rate cuts in very near future. It was up at 90, then down to 30. Now it's creeping up again. Given the last numbers, 24 minutes into the podcast became longer than I thought. It's only one thing left. That's the $1,000 challenge. And I didn't mention it during all the podcasts, and you've probably been patiently waiting. Neither did I mention some very good stocks to buy. Because when I was looking at the market today, scanning through stocks, trying to find some stocks which I could advise you to buy with potential huge upside, I saw the risk was very hard, very, very hard. I just told you that Nasdaq is at resistance level. If it breaks up, it will be very good. And you can jump into all of these stocks which are overbought on the relative strength index or otherwise fallen very, very deep at the bottom of the trend. Just look that there is not much resistance above resistance. You can see as gray lines in the chart. If you go to stockinvest.us, find your ticker, you can see some gray bars at the right hand side in the chart. This is accumulated volume, or how many people bought and sold shares at different levels. If there is like a big bar coming out, a lot of people bought shares at that level. If you are below, you can expect when price gets up, people who have been in loss, they are just patiently waiting to sell to get out of the position, and that is why it becomes resistance level. Same thing below, there is a support level. Now if many people bought and you have a gray bar under the price line, that a lot of people bought at this level and they are not likely to sell unless it breaks under. And usually when you break under a support level, and you do it by significance, meaning just not a few trades but some significant volume under support level, you have a huge fall to the next level. That is why I told you 2 weeks ago, now if we break this level, you can just expect a huge fall in the market, which came. NIO was in the $1,000 challenge. The $1,000 challenge was up at $4,000, almost $3,954 if I remember correct. Everything was looking very good. We had 20% plus in NIO. Then this market and everything happened, and I told you I had a huge stop loss in NIO because it's such a volatile stock. Markets are volatile. I was betting on direction. The stop loss was not triggered on the Monday open because markets opened under the stop loss, but later it was triggered and NIO was cut out of the portfolio at 386. Giving a loss of 9.6% for the NIO trade. Bought at 427, sold at 386, losing 9.6% from what was an absolutely good trade in the beginning. Putting the $1,000 challenge at $3,042. So we are down almost $1,000. Yes, we managed to grow it to almost $1,000 to almost $4,000. But now we are back at 3,000, and that's the name of the game. And I couldn't find any stock which I with good solid conscience could buy this week because I am not sure how the week will progress. I just hope that when we get to the end of the week it will be very green. Because lately even my portfolio, which I have tried to structure as good as I can, and I have been cutting down to only 30% investment into the stock markets, even these 30% did take a huge hit in the last few weeks of the market. So I felt the effect of the bad market, which most people do. So I cannot with good conscience say a stock which I will buy. So for the first time in a very long time, there will be no open trades in the $1,000 challenge. I will use the week to try to find the next good candidate to buy so we can start or continue to grow the $1,000 challenge. And if you want to know which stock it will be, you just have to tune in next Monday for the next podcast. Until then, just have a super week, and I really wish, I hope for you, that by the end of the week your portfolio is greener than in the beginning of the week. Bye.
Welcome to stockinvest.us stock analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon stockinvest.us. By using the information you agree and are held liable for your own investment decisions.